Hey everybody, Kimo Sabe here, giving you an update, a much sought after update. Highly requested. So, looking at the daily chart here from the bear market lows, we have patterns that just go sideways, up, sideways, up, sideways. And this consolidation stair stepping is a very sustainable rally, I would say. Um, it could get very parabolic and unsustainable in the near future, but don't know that it comes from this exact area today or tomorrow or this week even. This is a very nice move that went straight up and has not grabbed any liquidity. I'm currently equating this to early on in the cycle where price moved up and consolidated down and had this straight up move, and there was no liquidity grabs, no buying and selling going on. It was just kind of straight up. It went a lot faster than the current move up, but the market cap is a lot higher here. So you're moving up, what, $40,000 instead of $4,000, which there's something to be said about that. We are almost 10 times higher than this current area, well, 5 times higher. And this move was from 24,000 to 30,000. So that's $6,000 up. And now we're moving up $40,000. That's substantially more, but just looking at the pattern and saying you move up and then consolidate and then markup phase, and now move up, matching that bottom leg up with the, we'll call it the Trump pump here in 2024, and then a consolidation and a straight up move. We have a straight up move. And what we're seeing is very similar psychology in the market. I'm very attuned to this because I do pay attention to this particular chart the most. It's where I make my daily bread, trade it just about every day. And I can say that, max bearishness, people were pretty bullish. People were max bearish again, max bullish, pretty bearish, max bullish, max bearish, max bullish, max bearish, and it just rinse and repeat. It just keeps doing the same thing. Now, everyone and their grandma wants to buy any pullback because, there's a pullback area, a nice, support right there. Everybody sees the same thing. It makes sense. And I'm not opposed to that. That could ultimately be the ultimate buy. And you've got an inverse head and shoulders, and then target for the inverse head and shoulders is like 150. I get it. However, the market doesn't make it that easy. Usually it makes it look like it's that easy, and then it's not. This particular area right here that I'm kind of equating current price action to, I remember how the sentiment was. It was pretty bullish. This got everybody kind of bearish, but that impulse up said, you got 1, 2, 3, 4, 5. That's your correction. There's wave 1. Look for a shallow pullback for wave 2, and it's gone. So I know that from what I followed on social media, this was the area that everybody was max long, and the market didn't go. It went in a straight down candle. And I remember the liquidations were historic. They were record number liquidations there. Just too much longs going on. And you had a very nice three-wave pullback, and it bumped off. You had a reaction, but you need a stop loss. So get stopped out and then go. So we may be experiencing the same type of scenario here where you do get an ABC and it retests the lows. I'd say be ready for that. In this current area that we're in now, I would say there's either no pullback at all and you're going to remain above all-time high, or it's going to be a deeper pullback than you want. And I say that because there are liquidity areas throughout this chart. Liquidity was not taken here, here, or here. In an Elliott wave, I can give you a very simple Elliott wave count, just saying that this is ABC up, and this is a B wave, and you're about to do an ABC down like that, just straight down. And this will complete your wave 4. And from wave 4, then you get an extended 5th wave. But right now, in this general area, I'm seeing up only patterns and people adding, like doubling down. Um, there's just a lot of leverage adding up, and that's not a recipe for success. Generally, what they do in this scenario, they bring it up a little bit, get you confident, and then they either bore you to death and make you pay a lot of fees for holding your position, or they give you a really beautiful 3-wave pullback. And then you got wave 1. Oh, there's wave 2. This is beautiful. You have an inverse head and shoulders pattern, continuation to the upside. Whereas the inverse head and shoulders pattern is actually a bottoming pattern. I would not expect it at the top of a rally. It's not really a valid pattern, but I'm sure you're going to get people saying it is. And max long liquidations. That's just what I see for now. So either the pullback is going to be nothing or a lot. I don't think there's an in between. This is a too obvious of an area to buy the pullback for me. That's at least what I'm seeing. So be cautious of that. Let's zoom into the current rally on the candles and just draw out the pattern, and we can measure it. Actually, let me draw a path. That way I'll be able to measure on top of that. So I was matching this and then going A, B, C, and then matching that. So that's my matching pattern that I had, giving you the 74, 84, 94, 104, and now pushing on the 114 is what we're kind of looking at. So the measurement to complete the pattern, I'm just taking the first leg as like Elliott wave, you'd say wave 1, and then there's 1, 2, 3, 4, 5 or something like that in here for wave 3. Here's wave 4, or wave 5 measures the same as wave 1. And I would take it on a closing basis just to be conservative. Closing price to closing price, projecting from current closing low, gives you a pattern target of potentially 115. I have seen these reverse at the 786 before and not make full target. You can project from the wick. That'll give you an even more conservative target, which is the 114 that I'm kind of looking for. So, 4, 4, 4, 4, 4. And it just moves up. And another reason for that potential target is maybe a bull trap or an area where things start going sideways, is if we measure the previous pattern that I was just discussing and how much higher that price went, just on a percentage terms from that high to that high, you have 2.16 or 2.64% higher. Let's go to the bull trappy 2021 high. And we'll measure from that high to that high, 3%. So that's how the market likes to trap people, is 2 to 3% higher than the previous all-time high. I have the all-time high marked here. So we'll measure 2.5 to 3% up. Let's say 3%. Get you to like 113.6. Yeah, 113,000. Anywhere in that vicinity. I'd say if you start getting up to 119, I'd say that is not an upthrust, and you're likely going to hold above all-time high and look for another buy setup in the 114 area to look for 124, and we'll just keep playing the fours, I guess, and into perpetuity. But I'm expecting this pattern to complete here at 114. Potentially tomorrow, potentially the day after. Just kind of what I'm looking at as taking liquidity from up here. These orders either have to be digested or they have to be put somewhere else. And I'm saying there's plenty of liquidity down here left behind to take these orders and push them into those. So something to be cautious of. Another reason why I think a pullback may be coming is due to the MSTR chart, the MicroStrategy chart. I haven't done a video on this in like 5 months, 6 months, whenever this high was. Back in probably November, December, I made a video about it and marked this off on the weekly chart. That's the weekly wick. And you have strong sellers and weaker sellers on the 50% mark. So I just measure out 50% of the weekly candle wick and say those are where the strong sellers are at the top of the wick. Whoever sold there probably has more supply to unload, so you may not even surpass that. And that target is 478. So if you got in lower on the higher high, higher low, and now you're up 50, 60% here, that's an area that I would be shaving some profits and saying, hey, expect some kind of retrace, maybe a retest of this area here at 335, or holding previous support as support again. So this could be a reaccumulation right here, spring, backtest to spring, and now you're having a show of strength. So if this comes down, this might be a buy for a push up into that. But if this just wicks up here this week, I'd say that's likely a candidate to take some profits, and you're clearing out all this liquidity, and then you come down. Then if you break above that again, you're probably going to tackle all-time high. But this paired with the Bitcoin chart, what it's currently doing, it looks like you're about to have a little distribution here and an upthrust. And Bitcoin may do the same thing in the next day or two. And then MicroStrategy either reverses sharply and comes down for an ABC, or it's going to hold this range again like it did 20 years ago and just kind of hold in a distribution range for a while. But it does say that this is an area to take profits as a trader. That's an area to secure some profit. So Bitcoin might be doing the same thing. It's just pushing up into an area to take some profit. I'm zooming in here to the 4-hour chart on Bitcoin, seeing if we could project some targets. Had it counted as, just to label it as an ABC. It's a really nice upsloping wave 4. So now that pattern, it kind of generates a target based on the height of that. I could say that's your height, and then you broke out above it. So you're almost at the pattern target. Just saying that's a range, and you break up, and you're almost there. Still looking for potentially 114, so it looks good. If that is an ABC wave 4, we can easily count that out. Where's my Elliott waves? There you are. 41, 2, all of that would have to be 3. There's your wave 4. I'm pushing up for wave 5. Target for wave 5 should be probably done in linear scale, but let's see what it looks like on long scale if you add waves 1 plus 3 projected from the bottom of 4. You've already passed up the 618 extension. Next target would be the 786 around 113, and 115 ultimately the 1-to-1 target for that. So this can be pushing up to extend this similar leg up to 115, 116. Totally possible. As long as the trend is up, the trend is your friend until the end. As long as you know where to manage risk from. If you don't know where to manage risk from, join me in Slice, that Slice app. I've been updating this repeatedly. I don't know how many buy setups I've given, and there's at least one per day, sometimes twice a day. I'm able to give entries, and none of them have been, oh wait, no, we got stopped out today. Well, I got stopped out today on this wick down, but then found re-entry and then just pushed up again. But all the other ones, they're not stopped out yet. I did take profit on them. They're all set to take profit at 110, so I'm at a profit-taking area, but still expecting 114, but I'll find another entry for that. And then expecting some downside, expecting some of this liquidity to be taken. Eventually, this liquidity is ripe for the picking down here around 100K. So maybe we get that at the cycle low, and that's a shallow retrace. That's all you get. where you're coming way, way deeper. It might be very fast and ridiculous, but yeah, we look to update that in real time on Slice. So if you're so inclined to follow along with this stuff in real time, I'm able to update that very quickly in Slice, giving play-by-play when it's time to enter trades and very tight stop losses. And you could still be running with that now. I've already closed mine, but maybe somebody else did not close all of it. Maybe they just took a little profit, but profit-taking area for me. So that's how we do it. We keep the stops tight and have a good night.